Hey guys, welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I'm going to give you my 4 top penny stocks that I think you should put on your watch list because they're going to be making some big moves. So let's get right into it. Okay guys, my first one is called Celsion Corp. One of the bigger movers of the day so far is Celsion Corp, up 20.3% at midday on January 26th. CLSN is the ticker symbol. CLSN stock sits at around $1.70 per share, including today's gain. Shares of CLSN stock have shot up by almost 150% in the past month and 260% since November. This steep rise is underlined by the company's work in the biotech sector. Celsion produces clinical stage oncology-focused drugs. It utilizes the principles of RNA and DNA-based therapies to produce cancer-fighting agents. This includes its drug, Thermodox, which is currently in a phase 3 trial for treating liver cancer. Additionally, the company holds claim to GN1, which is still developing to treat both ovarian and brain cancers. While it isn't working on a COVID-related treatment, the company has seen heightened bullish interest from the uptick in bullish sentiment surrounding biotech penny stocks. A week or so ago, the company announced a market offering worth around $35 million. They allow for accelerated growth and cover corporate and research costs before a drug is commercialized. This offering is definitely worth noting to see if it adds any further dilution to the market. With that in mind, is CLSN a penny stock to watch? Well guys, let's take a look at this chart right here. So looking at the 1-day interval chart, you can see that the stock price went up to around $4.85 back in June 2020, and then it fell down to around $1.29 in July, and then ever since then it's been going downhill from there. And then the RSI has been very low around the 20 range. It was oversold, and then just around October it started to pick up again. The RSI has been going up, and then you can see here it went up to $1.74, where we are at right now at $1.78. So this stock right now looks like it's consolidating, and it could grow higher from here. The stochastic shows that it is 43. It's still going on the downside. We could see another pullback because we saw a 27% gain today. So there could be some profit taking. Some people might want to get some profit out before they get into it again. And it is down 12 cents after the market closed. Okay guys, my next stock is called GNPX. Another big gainer of the day is GNPX Inc., pulling in roughly 14% in midday gains. Interestingly enough, shares of GNPX stock look like they could be heading out of penny stock territory at its current price of $4.83 per share. Since November, shares of GNPX stock have shot up by over 50%, which is quite a notable gain. National Securities initiated coverage on GNPX this week, giving it a buy rating. This came alongside a $7 price target for the penny stock as well. With a 52-week high of over $7, GNPX could be an interesting penny stock to watch. To take a deeper dive, let's look at its business model. The company is a clinical stage gene therapy business focusing on both cancer and diabetes treatments. These are two substantial patient populations, which means that GNPX has quite a broad market. The company has a large pipeline of drugs, including Recorsa, its lead product candidate. This is used to treat lung cancer and utilizes a multimodal mechanism to stop cancer cells from replicating. A few weeks ago, the company announced that it had reached a major manufacturing milestone for Recorsa, which has led to bullish sentiment since. Rodney Varner, CEO of GNPX, stated that the successful completion of this final step in our scaled-up clinical-grade manufacturing of Recorsa marks a key manufacturing milestone for GNPX and is credited to the hard work of both our internal manufacturing group and our manufacturing partners. So guys, you can see the chart right here. Back in January 2020, last year, it was trading at 38 cents. And then it went up all the way to $4.90 and $4.78, and then it dropped due to the pandemic to $1.58. And the RSI has been around 43. It has been strong. It has been going up a little bit to around 66, but it has been keeping that steady level of 44 to 45. And right now we are at 64, which it has turned around. The RSI strength is going up, and it shows that we might be getting some more strength into this stock, and it could go to make newer highs. So if we pass the $5.51, which is the next resistance, then we can see the stock going to around the $7 mark, which they are predicting. The momentum also shows that it is turned around from the negative and it's going back up to 1. And the stochastic shows that it's at 57, which is going higher. So there's some good news about this stock, and it is already up 13 cents after the market closed. Okay guys, my third penny stock for today is Jiron Corp. Another biotech penny stock on our list is Jiron Corp. It works as a late-stage biopharmaceutical company with a focus on treating hematologic myeloid malignancies. While this may sound very specific, Jiron has carved out a large niche for itself in the biotech industry. The company's most prominent drug is a telomerase inhibitor known as imetelstat. This drug is currently in 2 phase 3 clinical trials for this compound. In the previous stage, the company stated that positive clinical data showed that this treatment could modify certain aspects of myelodysplastic syndromes. A month or so ago, the company announced that it would be opening a new phase 3 clinical trial utilizing its Impact MF product to evaluate imetelstat. The chief medical officer for Jiron, Alexandro Rizzo, states that as Jiron's second registration enabling phase 3 trial is hematologic myeloid malignancies, the Impact MF trial represents a milestone for our company. The Impact MF trial will evaluate imetelstat in a poor prognosis refractory MF patient population to confirm the clinical benefits of extended overall survival and symptom improvement. And if they see these clinical benefits from survivors and also improvements in symptoms, then this company can really skyrocket. Taking a look at this chart right here, as of April, the stock was trading at $1.15, and then it went up to around $1.97, and then up to around over $2, and then went back down again. And it's been trading in this zigzag motion, roughly between $2 to around $1.74, and then it went all the way down to $1.63. And currently we are trading at around $1.72. The RSI is around 52, which it has been around that level around March. And the stochastic shows that it is a little bit overbought. So we could expect to see either another continuation of this going a little more, or we can see a little pullback going a little bit lower and then going back up again. So I would wait to see what the next movement is going to be for this stock. But for the long term, I think any of these penny stocks would be very good because biotechnology stocks are here to stay, folks. Biotechnology stocks are going to be the future of our medical technology. Okay guys, my number 4 penny stock for today is called Mankind Corp. It is a penny stock that has been on our radar for quite some time. We've discussed MNKD stock over the past 6-month period due to its considerable rise in value. In the past 6 months, shares of MNKD stock have shot up by around 130%. Mankind has received a great deal of attention as a biotech penny stock during COVID. The company focuses on diabetes and hypertension related drugs. Its leading candidate, Afrezza, is a highly regarded inhalable insulin. Currently, insulin is often given to those who have diabetes in a more invasive way, often requiring hypodermic needles or underskin implants. With this inhalable technology, Mankind has an opportunity to capitalize on a huge industry. In 2020, Fortune Business Insights stated that the human insulin market was worth roughly $27 billion worldwide. Additionally, the report states that the industry is growing at a solid 3.4% all the way up to 2026. With over 34 million people living with diabetes in the US alone, this product could be well received by the public. With all of this in mind, MNKD stock does remain a rather volatile penny stock to watch. But if this is what you're looking for, MNKD could be worth keeping an eye on. As of January 2020, the stock was $1.76, and then it went down during the COVID-19 pandemic at around 99 cents. And ever since then, it has shot up and gone up all the way up to $3.72, where it is trading right now at $3.67. The RSI is at 59, which shows that it could go a little bit more from here. And then the stochastic shows that it is 76, and the momentum is at 0.5. So we could see this stock go a little bit higher from here. and there's a lot of growth potential for this stock because of the fact that there are many millions of people with diabetes and pre-diabetes conditions. So we will need to see this stock pass this resistance level of $3.96, and if it does pass this resistance level, then we should see it go above to around $5 to around $7 per share. But again, guys, this is not financial advice. Everything in this video is just for entertainment purposes only. These are just my picks. Guys, let me know your thoughts about these 4 stocks that I just shared with you guys. If you like any of them, let me know. Leave your comments down below. Like this video, subscribe to my channel if you haven't already done so, and I'll see you guys in my next video. Thanks for watching.